What's going on, guys? Welcome back to another video. So in this one, we're going to be talking about a little bit of what happened in the market today. There is somewhat of a gamma or delta squeeze going on right now. And there's also a couple of other reasons why we are seeing this price action starting to move to the upside. We're going to go over exactly what we could see going into the end of the week and why this week is so important. And we also have kind of a way to never actually lose a trade or have a red day trading any more or ever again. Now, hint, it's just to be a bank, but we're going to go into that a little bit later. So guys, again, before we get into all of that information, if you do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And again, guys, make sure you guys hit that subscribe button too and have those notifications turned on so you never miss any one of these videos. So coming over here and taking a look at the price action on the SPY today, well, at the current time that I'm recording, it's getting towards the end of the day. We're up about 2.75%. Now, looking at this on the 4-hour time frame here, we're seeing some pretty interesting price action. We've rallied off of those lows after the CPI data came out. Again, we retested and then started to move back up. We are hunting this 4-hour crossback to the upside here, but I would say that we easily could reject at this 372.50, 373 level. That's going to be another key level to look out for, especially with what we're seeing in the overall market right now. Now, when we take a look at this on the daily time frame here too, well, we're just kind of hanging around this 13 EMA here. So again, a lot of these kind of indicators that we're looking at here haven't necessarily shown us the direction that the market is most likely headed in the future yet. So we're still waiting for that confirmation move. But again, with earnings season, with all of the stuff from the UK coming out right now, we're going to be seeing a lot of volatility. And again, there was a lot of money to be made throughout all of these volatile moves. If you guys do want to check out the best place to come and learn how to trade, where I'm live streaming every single day with all of the alerts, the algorithms, the predictive algorithms, the curriculum videos, make sure you guys check out that link down below. We have some really cool stuff coming for you guys over the next few weeks. You definitely do not want to miss out. Now, coming over here and taking a look at some of the other key indexes that we do like to watch for, the dollar slipped lower today. Another reason why we could be seeing the markets coming up. We saw the 10-year treasury pretty flat today, and the 2-year treasury, same difference, a little bit red over here too. But what I really kind of want to focus in on here and make sure that you guys are paying attention to is these 30-year UK gilts. It's their equivalent of treasuries. We've been talking about these a lot, and on this time frame here, the 4-hour, you can see how volatile these yields have been. Remember, the Bank of England came out right around here and started buying these treasuries, sending these yields lower and bidding up the prices, and then we started to see it rally back up into around last Friday, where we were going to be seeing the stopping of the Bank of England purchasing these bonds and providing that backstop to essentially the financial markets. Now, if we start to see these yields come back up and more selling out of these UK gilts, well, then it's very possible that markets as a whole are going to be seeing more downside. Now, again, with the price action that we saw on Friday, this potential selling off of a lot of those gilts, it could be why we are seeing a nice little bounce back up today with all of that selling pressure coming into a lot of these markets that was happening on Friday. And again, the UK is something to continue to look out for here. UK Prime Minister Liz Truss faces serious pressure to resign after failed budget. What she's essentially done here is taken all credibility away from any policies that she's going to be trying to bring forth in the future. Remember, she came out and said, well, we're going to be decreasing taxes, and it's also something that she was running on in order to get elected. Then she saw the reaction from the financial markets, said, oops, we can't do this. We're actually going to go the complete opposite route and increase taxes after the Bank of England was purchasing those bonds. So you can kind of see that they're running around like a chicken with their head, you know what, over in the UK markets right now. And there's really not a lot of trust in this new prime minister. If she gets removed, you can again see some more volatility. And going into kind of the rest of the day here, again, there's no Fed pivot coming until we really see us get up to that terminal rate. We have a 99.4% chance or probability of a 75 basis point rate hike coming in November. Economic data this week, it's not that crazy. We have industrial production coming tomorrow, capacity utilization, home builders. We have a little bit of housing data coming out here too. But what people are really going to be focusing on is earnings season. So tomorrow morning, we're getting basically the last of the banks. We're going to be getting Goldman Sachs, which is a report to definitely pay attention to. We're also going to be getting Netflix earnings this week, Tesla earnings, and Snapchat earnings. Definitely companies that the market is going to be watching out for to see how they're reporting in order to kind of get an understanding of how the these other companies could report, and the market's most likely going to move in tandem with how these companies perform in terms of their share price after they report these earnings. But let's kind of talk a little bit more about this sort of gamma or delta squeeze situation that we're seeing in the markets now and exactly why. Over the weekend, we pointed out that the Friday's bloodbattery was dominated by hedge fund shorting, setting the market up for a major squeeze higher yet again. We've been in this scenario with the market recently where we've seen these over aggressive shorts coming in. They start to make some money. They end up getting squeezed out if you were shorting at these lows, and then the market rallies for a short period of time. The overall prime book saw the largest notional net selling in 4 months, negative 2.1 standard deviations outside of the norm, driven by short sales outpacing long buys nearly 5-1. This week's notional short sales ranks in the 94th percentile versus the past year. Now, we also saw a very, very significant amount of put buying here. 19.9 billion worth of puts were bought to open, and only 6.5 billion in premium in calls were bought to open too. But again, puts could have been a little bit more expensive than calls, so you really have to look at open interest in order to get a better understanding of how these moves are actually functioning here. But again, when you see a giant amount of open interest coming into one side, there are two things that can happen. You can cause a gamma to the downside when you are seeing the hedging that takes place after a lot of these contracts are purchased, and then the market starts to move in that direction. Or if the market already makes that move, people get out of those put contracts. They were previously hedged, so now the market makers or whoever is selling these contracts who has previously hedged them by shorting comes out into the open market, buys those shares to close out their hedge position, and then you see the market come back to the upside. Now, something that I do want to keep in mind here too, all that said, another 2 to 3% rally will be that and nothing more, as Michael Hartnett warned, more downside is coming until the end of the month when a sustained buying spree will be launched by the return of buybacks. Now, this is an article from back in 2019, but this portion right here I think is pretty important. So unofficially, a company's buyback blackout period, meaning they can't go out and buy their own shares on the open market, lasts from the last 2 weeks of the quarter until after 48 hours it announces its quarter's earnings results. However, this is hardly a firm rule because companies can set rules enabling them to buy back shares during the blackout period under certain conditions. But for most companies here, they're not going to be going out and buying their own shares during this period. So if you have a general understanding of when companies may not be providing that extra buying pressure back into the market, and you know around the time when that's going to end, well, then we could end up seeing some moves to the upside once these buybacks end up coming back. If you do any research on stock buybacks and how they contribute to stocks' overall performance over the long term, you'll see that a lot of value is created over the long term from these buybacks. And by value, I mean share price increases. So the last thing that I kind of want to touch on here before we end up wrapping up this video is, again, we put this in the title, but it's how to never have a trading loss ever again during a day. If you look at this article right here, also something remarkable, the Bank of America reported that in Q3, it suffered 0 trading day losses, an amazing achievement for a quarter where most people could not make any money. So if you're a bank and you're taking the other side of a lot of these trades that people are taking, either it's retail or some of these institutions that are hedging, and you have a lot of volatility in the markets, it's very possible that you're not going to have any red days. This is pretty crazy here that Bank of America was able to do this. I don't see this happening much in the future, that they literally had 0 red days in a quarter. It's pretty remarkable that this actually happened, but that's definitely something kind of funny or comical to kind of look at because, again, we all take losses. It's part of the game. But apparently not if you're a large banking institution. So guys, that is going to wrap up this video here. If you did enjoy the information and analysis that I provided for you guys in this one, make sure you guys go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. If you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great start to the week. I'll see you guys in the next one. Peace.